Okay, let me check and see if this is gonna work out this way, and see if the microphone's gonna work well with me today. But yes, welcome to a Trading View exclusive version of Trade First Academy. What I'm gonna do is I'm just gonna take the watermark off of that because that's some proprietary stuff right there. And you guys can maybe try to figure out how this thing works later. But yeah, so I'm hosting a call right now for Trade First Academy. I want to see if this is going to work out to give access back to our students via YouTube and some other streaming platforms. Right now, I'm going to lock this one up, put it on my local Trading View account, and see if the microphone works just fine. So yeah, so we'll hop right into the analysis, and then we'll see what we got. Okay, so like I mentioned, the way my proprietary firm is trading, right? They like to think of price in three different steps, right? And this is going to be very big and very beneficial to new traders as well as intermediate and advanced traders, traders in general, when it comes to really honing in on your entries, your entry time frames. A lot of people ask about a top-down analysis and how do they really, you know, equate what they're seeing on the lower time frames to what they're seeing on the larger time frames and vice versa. So, right, I'm going to get into it as best I can and simplify this for you guys, right? So, when we talk about what we're looking for as we start to look at a currency pair that's interesting to us, right? We look at the higher time frame trend, right? And that's going to give us our ability strength, right? And we're going to look across the board on a bunch of these, right? Because when you're looking at something, an asset, right, that you're trying to trade, right, there's some counterparty, there's some liquidity there, there's some, factors involved that makes one thing more desirable than the other. At which point you're going to exchange one for the other, right? In the foreign exchange market, we exchange currencies, right? So you have a quote pair and you have a recessive pair, right? And you basically trade against, either of those two pairs, one that you think is going to be more aggressive or bullish and has a higher interest, a higher likelihood to have prices go up. And then you have another pair, which is the recessive pair, that you believe is not as strong and you believe its prices will go down. And you will trade in favor of the more interesting pair, right? So that's what we're basically going to find with our higher time frame trend. So how do we choose our higher time frame trend? Right? You can simply go to your lowest time frame, right? And you have to have some sort of entry criteria. I know some people use candlesticks. My favorites in particular, you guys can write these ones down, right? Or the pin bar, which I call the kangaroo tail. The longer the kangaroo tail, the better the signal in either direction. Which then down on the 15-minute time frame for me, right, I could see a nice Wyckoff accumulation and distribution schematic. If that is at a zone or a particular area of interest, and I see my accumulation or distribution setting up, then I'm fine with taking those trades. I usually do operate on the 15-minute, but I've found that stepping backwards and seeing what's really going on and getting the bigger picture, the bird's eye view, of price action, much like driving in traffic, right? If you could hop on Google Maps every time, before you drove to work or drove anywhere, drove somewhere on the weekend or something like that, right? You would zoom out to look at the traffic so you could avoid any congestions, any clogs, any stoppages, anything like that. You want the smoothest path, to where you're trying to go. And that's what we're doing with that top-down analysis. Okay, so 15-minute, right? We're entering in, right? I know I've got my best setups there. So what time frame should I go about that with, right? So there's something that was mentioned in another asset management group with an asset management team in Gibraltar. Um, which is in the UK, right, London. I had asked a question about the intermediate time frames, or basically is what they called it, and they told me that it's basically a 1 to 5 ratio. So if I'm looking at the 15 minute, I should multiply that by 5. It's about 95 minutes, or 70. Well, how much is it? Yeah, 75 minutes, which is about an hour 15, right? Hour 15 minutes. So about a 1 hour time frame would be my intermediate time frame, right? The intermediate time frame. Then so 1 hour. I'm gonna look for the velocity, right? How fast is price moving over the past hour, right? And we'll look at some things, some indicators that'll help view velocity and things of that nature. Oh, it's not. That's dope. My nephew just sent me a video of him dunking. Oh yeah, here we go. Look what we done started. All right, and right. So we check velocity at that point, right, from the 1 hour, right? And we want all of these things to check out. Now, what should that be, right? We do the same calculation of 1 to 5, so you should be around the 5 hour to 4 hours, what we normally use, right? So this is it. You just constructed your own trading plan. I'm not going to take any of these trades unless my entry time frame, my intermediate time frame, and my higher time frame all coincide and they all match. As simplistically as I can put it when you guys are coming to develop a trading plan. You know what I mean? You want to back test these sort of things. You want to look at this. You want to see, hey, does this work for me? Some of those sort of things. So as we go through this market forecast, um, keep these things in mind because this is the direction I'm going to go for the week. All right. So let's talk about it. All right. So I'm over here looking at the daily right now because the daily perspective is something that you should always take into account. Right? I know I said just not 4 hour, 1 hour, 15 minute. Yes, but the daily time frame is something that you can't manipulate. Right? The high for the day and the low for the day are exactly that. Okay, so I like to come to the daily to see where prices are moving as far as their directionality, as well as looking for some, market structure sort of clues, so I can add it to my analysis. Right? Because we're just basically surveyors, surveying land and looking over and seeing what previously happened for any congestion area, anything else like that. So yeah, looking at the Kiwi across the board, what you guys can do also, because you guys don't have this relative strength watch list, I'll have a futures watch list, and we'll do it from the futures watch list. Give me a second. I'll save this as um, okay, and then we'll come over here to my futures watch list, and you'll see pretty much the same similar um, structure and price, right? So you guys can have the same exact outlook over here in the futures market. You just come and you can set up your currency basket as I have it here. So when you're coming to TradingView, click here, click futures, type in 6, and then pretty much all of the futures contracts will show up. But realistically, you could just type in 6 plus the first letter of that country's currency. 6N, of course, is the Kiwi, the New Zealand. 6J, the Japanese futures. I do the current contract. 6S is the Swiss franc. 6, uh, which ones are a little, yeah, 6B is the British pound futures, right? As you guys can see, they line up pretty well. And then which one would trip you up a little bit? 6E, of course, is the euro. 6C was the CAD. 6J, 6N, 6A, and then just use the dollar index or USD1, the US dollar futures. Okay, contract in front. Okay, so you guys can make a currency basket like that, and the reason for the baskets are so that you can align yourself with the smart money, right? You want to think like the larger operator would. What are they interested in? What are they not interested in? We're in times of uh, tumult like we have right now. Russia just, you know, confirmed that they will be, going into war, at least with Ukraine, and they plan on striking Ukraine. So, Russia is a leader in the oil industry. So, oil prices, we could look at and see how that's affecting oil as a commodity or an index on commodities, and then the effect of oil as an index, how that affects the commodities in relation, right? And the other industries like natural gas, and once natural gas and oil do their thing, we also see gold, which tends to trend as a commodity with those gold and silver prices. And then if those commodities move, how do those commodities move in relation to the U.S. dollar, right? So some intermarket analysis there. That's basically what I'm doing here with this basket. So long story short, that's what we're going to be doing to look over the currency markets for the week. So what do we see as far as the current trend and the Kiwi futures market? Right, the futures market is going and trending down. We're in a oversold boundary right now, as you guys can see, as we're moving through this bearish channel. We're starting to make some bullish movements out of that channel. However, we do have a level of previous support turn resistance that is currently being retested as resistance. So Kiwi prices are falling. Right? We had a breakdown below this previous support, and we are rejecting this level, which is, I would say, we can actually, instead of doing that, we can read the ticker tape on that. So we can read these lows on the OHLC. There we go. Read the lows on the OHLC. Those 66,900 was what I was gonna say. At that level, that low, it keeps being retested. 66,940 at the 66,900 level. That's where I'll clean this up. Get this knocked down. Boom, you can see that 66,900 level has been, they've been attempting to break out above it, but they haven't had, much avail there. Right. So it broke down below that level. It started to be oversold. Of course, it's starting to push back up. As far as the trend direction on the daily, as you guys can see, it is bearish. Okay, it's headed down. If we were to think in terms of, the velocity, and as far as how fast is this trend moving, the type of speed sensing indications that I like to use, some of my favorites. Come over here and look at which ones should we use. You guys know I love volume, so I throw volume on there because volume precedes price movement. Also, stochastic. That's if they give me a volume indication there. Stochastics also lead price, and we use that and double that as a RSI. And then we also can use parabolic stop and reverse to see where Price's momentum is taking it at the moment. Right now, we do not have any overhead parabolic, movement right now. So we can see that velocity is increasing out of this oversold boundary, like I talked about. Right? This area here, as you can see, was oversold. Even looking at the RSI, you can see down here below 30 is oversold. Right? So prices ventured into oversold territory. They're bouncing back into this range. They created their own miniature trade range that you can see here, right? So until either of these lines are broken out, we can't confirm the directionality of the trend. However, we are slightly bullish on the Kiwi, but after, we're still overall bearish. Right? So another tool you can use would be a couple moving averages. Okay, you guys know me. I use the 20, 50, 200. The 200 can be on the higher time frames. You can see it's the green. 20 is the blue. 50 is the red. 200 is the green, right? By weighted average. Okay, so I've got my volume. I've got my RSI. I've got some other velocity indications on the chart. So basically what we're going to look at is the directionality of trend. We've obviously broken some swing lows. So that's how you can definitely say that prices are bearish in that regard on the Kiwi, right? Because we're breaking lows. We're failing to create new highs, lower lows, lower highs, as you guys can see. That's basically how that's happening and how that's being set up. Okay. So additionally, right, as you guys can see here, let's see. So if we did have anything, something saying could project the line off of that. Hold on, it's starting to lag a little bit on my computer screen. If we did have a parallel trend moving below, this would be its boundaries. In this movement, okay, this is much. It's probably slid out from there, right? So as you guys can see, definitely a bearish trend. So if we were to tally up the number of indications that we had that were bearish or bullish, right? I'll put one down finger, right? Because we've got, the trend itself is bearish on the daily. We've got our EMAs are pointing down, that's bearish, right? Prices are rejecting the 50 EMA, that's bearish. But prices are above our 20 EMA, so that's slightly bullish. So, but our EMAs are pointed downwards. They're not completely flat, but they're not pointed up either. Okay, and we're below the 200 on the daily. So I mean, the 200 is not necessarily. I like to see if the 200 gets rejected, or the time frames where we're above the 200 and we finally break the 200 with the EMA crossover. The 20 is moving faster than the 50, which is showing short-term bearishness is starting to increase. That's the type of velocity move I'm talking about right there. So we're starting to see some more bullish momentum, right? As far as momentum's going, the momentum's bullish, right? We're above 50, right? And heading up above there. So you can see some ambiguity in price, but overall we're bearish on the daily. Okay, so from the 4-hour perspective, right, as you guys can see, just like I was talking about, we're slightly bullish on the 4-hour, and we're getting a little bit of change of character, but not so much because we're still rejecting this high at that level.